Hey there, everyone. I looked at a couple of my videos and I decided it was time to do a tax planning video. How is tax planning done? So, tax planning refers to mm, not only worrying about your taxes during tax season, so between January and April, but thinking about year round. What is your plan going to be for paying your taxes? I'm going to use a couple examples here to help you figure out if you should be doing tax planning or not. Okay, so your first line of defense against taxes is making sure you have the right withholding. So you and your spouse need to talk about this, and you need to fill out W-4. W-4 is what you filled out when you first got your job. There's a couple misconceptions about this. It asks you on there if you want to have withholding as if you're married or single. You and your spouse can both do married. Okay, that's fine. But if you make significantly more than your spouse, it may be more advantageous for your spouse to do to be single on their W-4. This is a very difficult topic to explain to people, to clients. It's not. They think, well, my wife's married. How can she claim single on her W-4? W-4 is a legal document simply between you and your employer explaining what you want withheld. It's all estimated in any case. Your jobs, when they withhold taxes, they assume that is your only job. That's how the software works. That if they're using QuickBooks or Sage or Peachtree, whoever your accounting department is using for payroll, when you simply want to make sure you have the right withholding. When you have multiple jobs, they don't talk to each other until tax time, and that's when you realize when you made half of your income at one job and half of your income at the other, you've had 75% of the withholding that you needed. Okay, and that's assuming you make a significant amount at each job, but nevertheless, each job assumes that it is your only job unless you give them some indications that you need more withheld. And we do this by either claiming single, claiming no exemptions or fewer exemptions, and having additional withholding. That's something that not many people utilize. What you could do is, excuse me, what you could be doing is having one job pay for the taxes of the other. So what I mean by that, you can tell your employer that you want to have 0 exemptions, no withholding, or no, you're not married, and you want extra withholding from one job, even if you're married and have kids. But this is assuming that you have another job in which you make more money at. A lot of people like to see a big refund check at the end of the year. It's like having a mini savings account and then getting a bonus at the end of the year. But when you look at your salary, the amount of withholding you have does not affect what you are on paper making. It only determines how much money is withheld for taxes. It's a very difficult topic to explain if you're not looking at, if you don't deal with it every day. But trust me when I say you should be looking at what you make, what you owed, or what you received back. If it's the same as the previous year, let's say you're $400 short. What you could tell your job is that, so you're already taking, you could take one less exemption. If you're married, taking no exemptions and you're not having enough withheld, you could say single. Maybe you and you're claiming, married claiming 2 on your W-4, and your spouse is claiming married and 0. You could have your spouse either claim married or take an extra $3-4 from your check, from their paychecks. This isn't meant to constitute tax planning advice, rather to get you thinking about what is the best way to plan for tax season year round. I want to look at a couple of other strategies. Everyone, in my opinion, should have their own business. There's side hustle, I hate that word, but in the second time I've used that in video. But if you're making less than, I think the cutoff is something around $60,000 for the retirement savings credit, you should be taking advantage of that credit. You should be contributing to a retirement account. If you made less than, if you're single and you had less than $34,000 worth of income, you should, and you have kids, you should be planning on receiving the earned income credit. It's nice getting a $2,000 check at the end of the year, but what's even better is having a bigger paycheck bi-weekly. Okay, that is the purpose of this video. If you have paid preparer to your taxes, or you may have volunteered, they can give you a little bit of guidance about how to figure out what you should be having withheld, how you can do some tax planning. I'm going to do another video about the case for paid preparers for doing software or fillable forms. There's circumstances that work for each, and we're going to talk about those next. Thank you.